Hello everyone, in this module we study chapter 1, Finance and the Firm. The learning objectives include the field of finance, the duties of financial managers, the basic goal of a business firm, legal and ethical challenges for financial managers, forms of business organization. The field of finance include financial management. Financial management analyze and forecast a firm's performance, evaluate investment opportunities. Financial markets and institutions is the flow of funds through institutions and markets in which financial assets are sold. The impact of interest rate on that flow of funds. Investment. Locate, select, and manage money-producing assets. Figure 1 shows how financial management is operated. This is a typical organization of a typical corporation, including board of directors and a chief executive officer, and other VPs in different departments. Figure 1 shows how finance fits into a typical business organization. The vice president for finance or chief financial officer operates with the vice president of the other business teams. Financial markets and institutions. Topics include how interest rate levels are determined, how the Fed controls the money supply, the relationships between macroeconomic variables such as inflation, interest rates, money supply, and GDP. Investments. From investors' perspective, what matters is the rate of return on a security, such as risk-return trade-off. Investors prefer high returns to low returns and low risks to high risks. From the first perspective, this rate of return represents a cost of funds. The goal of the business firm. The primary financial goal of the business firm is to maximize the wealth of the firm's owners, or the value of the firm. Maximizing the value of the firm. The value of a firm is determined by what people are willing to pay for it. The legal and ethical challenges. Agency issues. Managers are agents for the firm's owners, but they may have interests that conflict with those owners. Interests of non-owner stakeholders, such as workers, creditors, suppliers, customers, and others are not owners, but may have a stake in the business. The form of a business organization, including proprietorship, partnership, corporation, and a limited liability company, which is LLC. The 4 different types of organization are different in terms of ease of information, owner's liability, life of term, separate legal entities, or the degree of control by owners. Corporation, a legal person separate and distinct from its owners. Advantages: limited liability, permanency, transferable of ownership, better access to capital, Disadvantages: double taxation, time and cost of incorporation,